Good morning, everybody. This is John Seville from Acorn Wealth, and this is your executive summary for setups for today, the 7th of October 2015. Okay, so basically, a quick review. We have been speaking about the open range of the market. Now, I spoke about this in Trading Room last night, but I wanted to just reiterate. Open range, of course, is the theory of the market breaking above the the range set by the first trading day and options expiration Friday of each month. Now, the open range of October so far is for the first of the month is a low of 1970 and 1900.70, I should say, and a high of 1927.21. So you can see these two lines represented here and here. And of course, we closed above that. Now, what that indicates is that the market should remain above these levels until the options expiration day. Now, that doesn't mean necessarily that we're going to continue going up the entire time. So that's a key thing to point out, because I think a lot of people were worried that are the shorts still valid that we're holding, even though we've broken upwards on our open range. In a lot of cases, the answer is yes, because these are longer term holds, and we analyze them based on support and resistance on the weekly chart. Whereas what we're looking at now, open range is specific only within a week or two's time frame, or three at the most. So basically, on the weekly chart, we're looking at a larger scale, and a lot of the shorts are still under their relative resistance lines. So in the short term, we have obviously a bullish bias, and we've been looking for mostly bullish stocks over these last few days, and started getting into those types of setups last week. So today I'm going to focus on new setups for today's trading, which are on the bullish side, that I thought had some extra good qualities. Now, I wanted to get a really good feel for the market, so I went through a much more kind of relaxed scan, so I could have a lot more stocks on my screen. And I'm just going to feel for how many opportunities I found. So on my long scan, I actually found 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 potential longs that that made my shortlist. So certainly there could be some more bullish activity. Now, what type of bullish activity is the key? So I do feel there is a key resistance level that the market's going to have to break through to go any further up. Now, those levels are these. Now, we know that obviously there are three types of key resistance levels the market operates with: moving averages, trend lines, and Bollinger Bands. Now, if we have a look at where the Bollinger Bands are on the S&P, we go from the top to the bottom of this move, and you can see we get the 50% Fibonacci comes in right here. Okay, right there, that's the 50%. So that comes in right around 2000. So I'll leave that line in there. The next line comes in around 61.8, which is here. So I'll draw that line in there as well. 77.7 is there. Okay, so we have these key levels that we want to consider on the market. Now, so these three levels here, here, and here represent the horizontal Fibonacci resistance. Okay, what have we got in terms of trend line resistance? Well, if we go back and you look at this level, that is the trend line connecting the bottom, and the top. So we've got 3 points, a confirmed trend line, which we're going to run into right around here as well, around 2000. We also have the moving average, with a 50-day moving average, which you can see coming down there, this grey line that's just exactly on that same trend line area. The other thing, if we just remove the lines for the moment, you can see is that the Bollinger Band, which is the extreme movement, is also above the stock. This is the river of movement that the index is able to move in. Now, when the index pierces this level, or gets close to it, you'll notice that's also where reversals occur. Back here, 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 Obviously a big pierce here, here the recent reversal, here the top. So we're also running into Bollinger Band resistance as well. So we've got a swarm of problems that the market's going to have to overcome to get beyond that. Now, that doesn't mean we're going to drop sharply down. It doesn't mean we're going to break sharply up. But right now, we have a lot of short positions. I'm majoritively short, and so I'm still looking at high quality longs as a hedge. Now again, I'm reinforced. If you haven't watched Trading Room from last night, watch it. I spent a lot of time talking about risk management, position management. You know, you never want to risk more than you lose when you're in options, which is why I'm in a lot of options with smaller amounts of capital. Now, in terms of stocks, I'm looking for longs that can offset those shorts. So either way, we're going to have losses, or possible losses, but it's meant to combine a robust portfolio. So the key thing is to never be overly emotional, and to make sure that you're always positioning well with proper risk management. So with that being said, these are the ones that I felt were the strongest setups from a long perspective using the strategies we trade. So OREX was hard to go past. Now, the one thing I don't like about this is that it's got the Pavlova effect. It has this moving average right on top of it that is going to be a problem to overcome. However, the money flow is extremely divergent, and that is kind of one of those magic things that, or secret ingredients that, if that's occurring, I get quite excited. And now you can see when we had this massive divergence back here in March 2011 is an example of that. This big divergence as this base formed, and the stock then went from roughly around $1.22 to $2.59. So these kind of divergences can be very interesting, and that's what we see here. We see the market's going down, though the stock's going down, yet we are not dropping in the money flow. In fact, we're going up sharply. So I'm just going to get this so we can see we've basically got a level here. So you can, if I'll just zoom in, you can see this level formed the key resistance area here and support back quite a while ago. Now, is it still relevant? Well, it can be. But we certainly can see that there is a, if we zoom in, that same level has been touched on as support back here on September 28th. So it may be being reused by the high frequency boys and girls, and that's one thing to keep note of. So as a possible trade, you can see we've got a support line accumulating here, and so I'd be looking at basically a possible entry on this at around 208, and I'd be looking at a stop loss below the low of this candle, which is at 198. So I'd be looking at 193. So basically 208 as an entry criteria, and 193 as a stop. So that now I would possibly buy a little bit higher, but I'd want to be watching that to see how the bullish activity is going. If I was to buy higher and buy on the rally. What I'd want to see, I'd probably want to see this moving average come down a little bit and buy on the retest of that 20-day. So OREX is one to be watching. Of course, the 20-day is there at 229. So that's the 230. Sorry. So that's the price to watch as we start to hit that. If it starts to break through strongly on volume, I just take it there at 230, 232. Let's say. So that's OREX. Now, OREX also has institutional buying. Let's have a quick look here. And so you can see that on OREX there's no real selling since back in February. And if we have a look at the institutional transactions, you can see we've had, in fact, two buys right here in August, and as recent as August 24th. So that's obviously positive for the stock. Now, the next one that I liked which again follows the trend of this sharp divergence in the money flow. This isn't as strong, but you can see that the money flow is definitely increasing as on Avon. The stock is basically the same price as it was before. Back around this $3.50 mark, but money flow sharply higher to about 25% higher. We've had a rally up. We've pulled back right onto support. We've got the 20 and the 9-day here. So basically at the current prices I'd be interested in a possible long here, and I'd be looking at a target of, looking at this target here, of a low, what's it, 437, so looking at 433. So we basically there on AVP from, what are we again, 364, so anywhere basically around the open on this stock up to, what did I say, what the low was, looking at 437, so 433. So as a stop loss criteria here, I'd be looking at the low of this candle, which is 341, so I'd be looking at 337. Now you can see that basically would give us, what's that, 30 cents of risk for about 70 cents of reward. So just a little bit above 2 to 1. And as soon as it started moving up, I'd be looking to increase that stop. Now, I'd like to have a look here at the 5-day chart, the 1 hourly chart, to see if we can even get a little bit tighter on that stop loss, just to, and if it still works. So for that, I'm going to go to the chart here. Got to look at the money flow. So we can see our breakout here, obviously. So on the money flow here, we can see that we're actually underneath that moving average. So we've actually got convergence quite tightly here. So in fact, upon review there, I would in fact change my opinion and buy it on the breakout. So I'd be looking actually for a rally up through 369. What's the high of that candle? 366. So 369, in fact, would be where the entry criteria would be. So that's a buy stop. So it doesn't trigger until it goes through that price. And then I think we could then accommodate, because that would be a continuation trade, we can then be a little bit more aggressive with the stop loss, because it's then broken up through into a new pattern. And so I would then, on the stop loss, be looking at 346, which just makes that just a little bit more tighter and a bit higher probability on that trade. Okay. So there we go. About 346 as a stop criteria, 369 as an entry criteria, and then again we'll go back to our daily chart. Okay, so you can see that that would work out quite nicely. Okay. So, all right, let's push on. The next one on the criteria was TPUB. Okay, now TPUB, obviously a lower price stock, lower volume too, so a bit more speculative. But again, was an eyebrow raiser because of the significant money flow change. Now we've got a sharp rally, obviously, from negative 22 to positive 2, so 24% change and breaking into positive territory with no real change in the stock price at all. But very high closes in the range of this last little while, just struggling to break through the 9-day moving average. So the 9 days at 826. So I mean, if this can break through, say, 829. This could be a decent long. I'd look at the support level of $8 as the key level. So we're looking basically at 829 as an entry, and I'd be looking at a stop criteria of 787. And in terms of a target, I believe that this has got a good chance of kind of getting back up to fill this gap Now, the first criteria it's going to run into is this moving average. So I'm going to expect for short-term traders, you may consider taking profit as it hits that moving average. But it should then consolidate, and upon the breakout, get a further push, by which time the 50-day moving average would be coming down, and we're probably going to find that the two intersect, the stock and the moving average, somewhere by around $10. So it could possibly be higher, more like this. I'd be going for the lower end here. So for a first target, I'd be looking at 983, and basically what I would be doing is adjusting the stop loss up as behind the moving average as the stock potentially rallies. Certainly protecting the entry point. DDD. So this is interesting. Triple D Systems has had obviously a massive decline. It was up at what's it, $98 and change, and is now all the way down to 12. I mean, this company's had some extremely big troubles, but look at the divergence here on the money flow, going from -43 to now -10. If we look at the chart, you can see it's just breaking through this kind of downward channel movement and an oscillation, built some movement, momentum down the bottom, and has been expanding range candles with increasing volume, 2.4 million, 2.68 million, 2.93 million. So this one could be a recovery story, and these are stocks that obviously are not looking anything like the market, and that's what I like about them, that we're not relying on market direction for them to hopefully have performance. They're not going down with the market, they're not going up with the market, they're doing their own thing, and that should give them some insulation from market movement. These are the classic type of fallen angels that I look for. Now DDD, I think if you can see it touches the moving averages beautifully when it's moving down. It rallies into these averages. The 5-day is the most important one, I believe, which is at 12.15. So I'd be looking at a possible buy at 12.20. So let's say 12.23. As I don't like to use even numbers because that's where the market makers look. So I'd be looking at 12.23. But this could have the next stop, if it overcomes that, you can see it's already breached the 50-day moving average today, so that doesn't seem to be too much of a threat. This should have an easy run up into this area here, where you can see this high and the moving average combine, and so I'd be looking just underneath that at 15.53. Well, no, I don't like 50 either, so I'd be looking at 15.46 as a target on that one. So that's a decent run. And as a stop loss, I'd be looking at the just under the low of this candle. Now the low was 1180, so I'd be looking at 1174, 1173. Okay. Next, or second last, in fact, is CRR. Carbo Ceramics. Now, again, good money flow divergence. This has now, and by the way, all of these, with the exclusion of TPUB, not TPUB, TPUB. It's TradingPub's the people we do some blogging with and marketing with. But no, TPUB. With the exclusion of TPUB, all of these stocks either have institutional buying or insider buying. I was trying to look at what the special ingredient here was on this stock, and it was exactly the same. We go to again TradingPub. You can look at TradingPub's in my mind. You go into Insider Cow, and you can look any of these up. CIR, for example. If we go into search that, you can see there's the substantial insider buying back in February. And we go to the institutional, and you can see, again, two different institutionals buying it just recently here in September. So as goes with, for example, AVP was one of the other ones. You'll see the same thing. DDD, same thing, insider buying. So all of these have this similar kind of money flow divergence. So smart money assumed to be getting in, and we get the confirmation from the insider buying. So CRR has those guts to it also, and you can see that we've come out of this kind of downward channel, which of course is oscillation. and we're going into a possible momentum mode. So I'd be looking for a pullback to around 1253. Sorry, not 1253. 2253 as a possible buy, but if it's somewhere in that region, I'd be happy with it too if you're watching it during the day. Just somewhere close to that, looking for a pullback until we start to see a reaction of support, a kind of reversal candle. So in terms of a stop criteria, I'd be then looking at the low of this candle, which is 20... let's have a look here. 2076, so I'd look at 2053. Okay, and in terms of a criteria for a target, this one has a real free run if it can get beyond this resistance. So I'd be looking at a target of basically around $30. I'd be looking just underneath that. So 29.92 would be my target on that one. So potentially very good run, where the risk reward we're looking at basically at $2 risk for a to 29.92. We're looking at $7 reward. So not bad at all. Okay. The last one on the list, FELP. So significant divergence here, obviously. So all of these have these similar criteria, but this is off the charts. So this is really, really impressive. So I'd be looking at basically, again, taking this ideally close to the 5-day moving average at, say, 613. But I mean, if it doesn't pull back to that, I'd happy just to take it anyway, somewhere around the open. So I would look for a pullback to 615, or try and snag it somewhere around this area, around 640. You just have to see how it opens. But this looks very good too. And this has looks like it's going to get a pretty much free run. It's breaking out currently. It's gone from 956,000 to 180,000, then bang, 1.22 million. This is kind of breakout surging. So this should hopefully give it enough steam to break through this moving average. This moving average hasn't proven effective before. The 50 doesn't seem to be the moving average that this stock listens to. It's actually far more important. Far more importantly, listening to the 100. If you can see this reversal back here, the 50 meaning nothing. So I'm not worried about the 50 in the context of the stock, and I think this would have a pretty good chance of running all the way up to basically fill up to this resistance zone. Let's have a look at where this candle was. I mean, my first checkpoint is going to be around 850, but this is an eve top, so I'm not too much concerned about that either. I'd be looking more so kind of around this level where this moving average comes into play. That's going to be the main threat, I feel. So I'd be looking just under $9 as that first area. So basically, that gives you a good run, and I'd be looking at the stop loss being just below this moving average here at... let's have a look where it's going to be tomorrow. So it's going to be roughly about $6. So I'll be looking at 586. Okay. And so just under the $9 zone will take us into about, say, 877. Okay, so that is it for the longs. And... let's see if we've got anything else here. CWST I've written down on a short list. I'll have to refresh my memory here. Oh, yes. Yeah, I keep an eye on this one. It's got a possible head and shoulders here, with a declining neckline, which is obviously very favorable for head and shoulder patterns. And we copy and drag that. So you can see that we've got a possible complex head and shoulders. So watch this carefully, but if we start to break down, we'll keep this on the watch list. You can see the money flow has really come out of the stock. CWST could be a really interesting short also. Watching that on the watch list, an aggressive short would take it now at $6. A conservative short would be to wait for it to break 560. But this is, again, so those are the options for a possible entry criteria based on my strategy. But being aware that there's a risk it could drop and bounce back up and create a second shoulder. But other than that, I'm very interested in this one. In fact, what we'd want to do is clear the high frequency trading buy zone here at 555. So looking for it to clear that would be the ideal area that I think a short would start to warrant a look. So looking at 553 as a possible short criteria, or basically this shoulder here around 613. So two criteria for entry, and then the stop would be based above when it triggers. So above the trend line here, or above the trend line here, depending on when it breaks it. You can't tell yet, so it just depends on when that happens, where that line is at. But certainly for a target, if we were to measure and assume that we get the breakdown maybe there, to be conservative, because this is higher up on the trend line, and we look at where that would be. Okay, we're looking at there. So we're looking at basically around $5. So we say 507 target, and the stop to be adjusted. So hopefully that helps. Again, I've talked about a lot of longs tonight because I wanted to show you all of my favorites. It doesn't by all means mean I'm going to go out and buy them all tomorrow. Now remember, if in terms of position sizing, if you felt like you wanted to be diversified and you wanted to, and let's say you were 80% short in your portfolio today, and you wanted to take 20% of your capital and buy some longs, well, you could then just split that 20% evenly up over a bunch of longs you find. You can just decrease your position size and spread it across more stocks. If you're using bracket orders, you don't ever have to really look at the stock. Just to adjust stop losses essentially is all you have to do, because you're trading your plan. So you can have 10 stocks or 100 stocks. If you program it all in at the beginning, your plan's in place, you can forget about it. So it's when you start to have too many stocks that you need to monitor constantly because there's no plan in place and you're readjusting it every day, is when you run into issues. So now, quick announcement, of course. We have just released our new videos for the Acorn Oak Club, which is the open range strategy for monthly charting and how to trade open range. And also we have released our day trading video on how to day trade open range on the SPY, and that is extremely interesting. I finished my research on the most recent data, and on the data that was displayed in this tutorial, it shows it to be 100% accurate. Now there's one trade which maybe would have whipsawed you, but otherwise 100% accurate going back over this last couple of weeks, which is amazing. So I mean, it's a deadly accurate strategy. It's like taking money from the market. You may never trade stocks again. So if you're not already a member of the Oak Club, there's a link in your executive summary email to access the open range strategies. Will be available as included in the Oak Club to anyone who enrolls before the end of this week. And again, you're not spending really any extra money. It's $147 US a month. Now this includes all of your trading room benefits, your trading room, your executive summaries, SMS text alerts, which are a new feature, the Acorn Oak Club customer portal coming this month, which is obviously a new feature, access to learning materials, as well as the series of video library that we mentioned in the email, and the different videos that are accessible and sent to you straight away, as well as additional videos that we begin to add in terms of the learning portal for frequently asked questions and things like that. So highly valuable. All we ask for is that you commit to a 3-month 3-month commitment to the Gold Room and the Oak Club, and that gets you everything in there that will basically supercharge your trading. So give us a chat if you have any questions. Otherwise, we'll see you all in the next executive summary. Take care.